Hey guys, so I'm going to give like a super informal introduction, but I actually ran into Kate. I kind of told you guys the backstory on our Monday call, but I ran into Kate on Twitter. We were on a voice, she was on a voice chat, and I was like, who is this lady that is talking all these tax things? And I was like, oh, I didn't know this, I didn't know that. So I messaged her, you know, I DM'd her on Twitter and I was like, hey, I'm in need of a CPA pretty badly. And yeah, I think a lot of people would really love your services on my channel and the Discord. And then, just started off there. And now, officially, again, the full transparency is I am a client of Kate's. And honestly, it's already been so amazing. I've learned so much in the span of like only a few days. So I'm really excited for you guys to learn what she has to share regarding crypto, NFTs, and taxes. You guys have asked some really good questions in the Discord. So without further ado, Kate, if you want to introduce yourself to everyone, go for it.
Sure, sure. Thank you so much for having me. This is honestly, it's such a pleasure. When we connected on Twitter, it's not often that I sync with someone so instantaneously. And so I'm really, really happy to be involved, and I'm getting caught up watching all the YouTube videos, learning all about SHIB. So I just feel so fortunate to connect with your community. And, as I've mentioned before on Twitter as well, taxes is sort of my one small piece that I can contribute to these communities. But every Discord and every Twitter space I've ever been a part of, the communities are so generous and have given me so much knowledge. And so the tax piece just happens to be, what I do in my 9 to 5 and is sort of my bread and butter. And I'm so glad that it, is something that can help alleviate some stress. So my hope is, tonight, if we can get through some Q&A, and hopefully everyone will walk away feeling a little bit less stressed about your taxes related to crypto or NFT transactions. So a little background on myself professionally. I'm ex Big Four accountant with KPMG. So I was doing corporate tax advisory with KPMG for a while. Prior to that, worked for a few regional firms in New York, where I'm licensed as a CPA. And it was really just this year in 2021 that I got exposed to crypto more seriously and started investing myself and got exposed to the NFT space as well. And as soon as, I think everyone in this room could agree, as soon as you recognize the opportunity at hand, I knew immediately that I needed to make a career shift, and that this was going to be a space that was going to continue to evolve and grow, and that we're still so early as investors in the space. And so about 4 months ago now, I had my last day at KPMG, made the full switch and transitioned to exclusively running my own practice. And so we do tax prep. We'll do full tax return preparation. We also do what's called a review service. So if you have your crypto and or NFT transaction data, we can do a sign off of your crypto and NFT transaction calculations. And then you can bring that to your normal tax return preparer if you have an accountant that you've worked with for a long time and have a good relationship with. And then we're also available for consulting. So one-off questions, or consulting hours on a more formal basis, like we do with the Your Pop channel, and assist with bookkeeping and more intimate sort of facets of your financial business transactions, etc. But the taxes is sort of my bread and butter. So it's been really great to be able to narrow my focus and just really dive into the crypto and NFT space fully, because as we all know, there's so much nuance in the space, and it's evolving and changing on a daily basis, it seems. And so I feel if I wasn't just exclusively focused on this area, I wouldn't be comfortable advising on it. So definitely happy to take any more questions on my background, though, or experience, if anybody has any more specific questions. If not, maybe we can jump into some of the Q&A.
Absolutely. And real quick, I feel like Kate kind of just, she jumped right through the fact that she worked for KPMG. So for those of you who aren't aware of, how accounting works, there's something called the Big Four accounting firms. And KPMG is one of them. My brother-in-law, he works for PwC, for example. So there's the Big Four, which are like, if you're thinking tech or something along those lines, or like, let's think crypto, think like the Bitcoin, Ethereums, Cardanos, like the big dogs, right? So with her background being a part of, a big four firm where she's had experience, that actually carries a lot of weight in her, and like for industry standards and things like that. So understand, and I know she's always super humble. Like she's, amongst the best of the best, which I think again, we don't want anything less than that, especially, on this platform on our channel. So yeah, Kate, I just wanted to make sure I added that little piece. So again, she really does have a pretty fantastic background. And I think for all of us, we're going to hopefully learn a lot about crypto taxes and any tax question in general. I mean,
Sure.
she's a professional.
Definitely, definitely.
Absolutely. Cool. So if nobody else has background related questions, we could probably just dive right in. I'm going to go in order of the questions that were asked on the Discord.
Okay.
I think we literally named it Kate Tax Questions. So we'll just jump in. And at the conclusion of everything, I will post her website. And actually, for those of you who can't even stick around, why don't I just do that from the very beginning? So I'll ask the first question and I'll put in the general chat and I'll pin it. Maybe Rocky, I can have you do that. Just pin her website, which I'll send you in just a second. So let's start with maybe just our first question now, which started from J871212002. He says, how do I figure out how much profits and losses when using MetaMask, Coinbase Wallet, and Uniswap? Most of my trades and swaps are through Uniswap.
Perfect. Yeah, so, fortunately, there are services out there like CoinTracker, Coinly, ZenLedger that can assist us in making these gain loss calculations for our crypto transactions, which is a huge relief to people like me, because if I had to longhand make all these calculations, it would take me probably 1,000 hours per client. So yeah, essentially, I mean, you can do it yourself, right? I'm guessing everyone in this room though is probably going to have higher transaction volume. So if you're looking at, anything more than like 100 transactions or so, you're going to want to elicit the help of one of those tracking services. And essentially, what you need to do is export all of your data from any exchanges and wallets that you've used. And it's important to remember that you need to export your data since inception. So I think a lot of people are going to make the mistake this year of only exporting their 2021 data. But the problem with that is most of us, as we start investing in the crypto space, we do what's called dollar cost averaging. So we purchase, we'll purchase $100 of SHIB here, $100 of SHIB there. And so over time, we build up, we amass, a quantity of crypto that we then use to maybe exchange, sell, purchase an NFT or purchase services with. And the problem is we've acquired that crypto in small pieces. And each time we acquired a piece, the valuation was different. And so our cost basis calculation can be a little bit complex. And so if you have a high transaction volume, it'll be difficult to track that manually. But there are services like CoinTracker, ZenLedger, Coinly that allow you to either connect your wallets directly to their platforms, which I don't know enough about the security level of doing that yet, so I don't want to make that recommendation. But one very, very secure and clean option is to export your transaction data again from inception. So if you started using, Coinbase 2 years ago, and that's when you started transacting in crypto, you're going to want to make sure you export your data since inception from all the wallets and exchanges, and then you can get what's called a CSV file or an Excel file and upload that to the CoinTrackers and Ledger, Coinly, etc., in order to facilitate the calculations of what your cost basis is going to be. And there are some nuances that you want to keep an eye out for, just making sure all your data reconciles. But in summary, just to answer that one question, that's basically the process. And if you were going somewhere differently with that question, feel free to jump in and I can clarify. But I think hopefully that's the gist of it.
Perfect. Thank you so much, Kate. So hopefully that answers the question regarding, how to look at the profit losses, but there are some really good trackers and tools. And on Kate's website, she actually has a coin tracker link as well. So if you want to navigate to that, you definitely can. And I did pin her in the general chat. If you guys go, everybody knows where the general chat is. I pinned her website, so you can go directly into there and just click become a client. And yeah, you can go from there. There's one-on-one services and a whole bunch of other things that we'll talk about towards the end in more detail. But let's go on to question number 2 from CryptoCast. And CryptoCast asks, if I am buying and selling tokens, but only swapping them to Ethereum, not to my bank account, do I need to pay taxes on the coins I traded?
Great question. Yeah, so I think it's pretty well understood by most people that if you cash out effectively, right? If you exchange your crypto for US dollars or another type of fiat currency, that you're going to have a taxable event there. So I think we can sort of put that to the side. Everyone is sort of clear on that. But this is a great question because if you are exchanging one type of crypto for another, say you are swapping SHIB for ETH, and then you're just going to hold that ETH and you don't plan on cashing that out to US dollars anytime soon, is that a taxable event? And I hate to be the bearer of bad news, but it is a taxable event. And whether or not you have a taxable gain, again, is going to depend on your cost basis. So, for example, if we have amassed, a few SHIB, we want to exchange that for ETH. All we need to know is if that SHIB has appreciated in value from the time that you originally acquired it to the time that you're swapping it out for ETH, then the amount of appreciation is going to be the gain that you'll be taxed on. So you're not taxed on the total amount that you have swapped for ETH. You're only taxed on the USD equivalent value of the gain amount. So you'll take your USD equivalent value of ETH that you are acquiring, and you'll subtract the USD equivalent value of your cost basis in the SHIB, and then the difference there will represent your gain or loss in some circumstances. So if you do have crypto that you've held and it has decreased in value, and then you swap that for another type of token, you'll recognize a loss. And so those losses in total can offset your total gains over the course of the tax year. So recognizing losses in that respect is also not necessarily a bad thing if you know that you are going to have gains on some exchanges. But in summary, even if you don't effectively cash out to fiat, you still are incurring a taxable event when you just exchange one type of crypto for another, assuming the crypto that you're exchanging has gone up in value since you first acquired it.
Perfect. So again, in essence, if you do have some tokens, say that were rug pulls or you lost a lot of money on and you know it's never going to come back, if you sell that back into Ethereum from the token that you invested in, you can, again, that can be considered a capital loss, which will offset some of the capital gains that you had from other tokens. Is that correct?
Yep,
Okay.
definitely. And crypto, I guess this is also another interesting point to bring up. Crypto at the moment is exempt from what's called the wash sale rules, which means in the stock market, there's what's called a wash sale penalty, whereby if you have a stock that you acquired and you are sort of a day trader and you monitor the valuations day to day and you see that it's gone up in value today and you sell quickly, but then the next day it's gone down in value and you buy back in at the lower amount. If you do that within a 30-day period, you violate what's called the wash sale rules and you pay a penalty on that unless you're a registered day trader. And so crypto, though, is still exempt from the wash sale penalty. So you can effectively day trade without a day trader's qualification, and you can sell crypto one day when it's high and then buy back in the very next day if it's low again. So the volume and the frequency that you exchange or trade doesn't impact impact your status with the IRS or incur any penalties or anything like that. So if you do need to do some tax loss harvesting and sell some tokens that have gone down in value, it's totally okay to do that and rebuy back in within a 30-day period. You're not going to incur any penalties on doing activity like that.
That's really good to know. Okay, I actually didn't know that till now. So cool. No wash sale rules in crypto yet. Yep. Good.
Not yet.
Okay. Fantastic. So looks like, from Lou Hustles, he has a question saying, how do we accurately account for the total amount of investment? So investing in investments, the gas fee, and other fees when looking at the Etherscan transaction, it seems to vary depending on where Ethereum's value is on that day. And then he says, how much did the total transaction really end up costing? So is that something that CoinTracker looks at, or any of those?
So CoinTracker claims that they are tracking that and including it in your cost basis for the asset that you're purchasing. And again, I do feel as though a lot of these tracking softwares are still so new that it is important to go back in and just do your own, double, triple check of all the valuations and making sure everything's being accounted for correctly. But they do claim that gas is something that is tracked and then is added to your cost basis. And so what I mean by that is if you incur a gas fee on a purchase transaction, while as an individual investor, that's not a tax deductible expense to you, what is a benefit to you is that the gas fee is added to your cost basis in the asset that you're acquiring. And that's beneficial to you because when you later go and exchange or sell that asset, it will help reduce the overall gain that you're going to end up recognizing because your cost basis will be slightly higher. And so this is very common in the NFT space at the moment because gas has been extremely high and folks are purchasing NFTs that are, fairly low cost, maybe equivalent of $200 to $250 but the gas fees, for example, would be like $100 or $150 or sometimes $200 I saw recently. And so the benefit there is that if you add that gas to your cost basis in the NFT, your cost basis effectively almost doubles. So then your NFT could almost double in value, and then you could sell it and not have to recognize much of a gain at all. And so that will really help you from a tax perspective. But as long as we're on the topic of gas fees too, I do also want to mention, if you're operating within the context of a business and you incur gas fees, those are tax deductible to your business. You can think of them as like transaction fees, right? Which are a pretty standard business deductible expense. And so if you are dealing in crypto or NFTs within the context of a business, either as a creator or a consultant or a trader, you can have those gas fees as a tax deductible expense.
There you go. So basically, if you don't have a business, make a business before the end of the year. Just kidding. I'm totally kidding, but kind of not. So going on to the next question here. It looks like we have one from Al Crypto, and he's actually in the chat right now with us too, just like CryptoCast. And he asks, what things can we consider tax write-offs, methods to pay the least amount of tax when filing taxes on crypto, i.e. have a small business, etc.?
Mm-hmm. Yeah, definitely. And so if you, again, to your point, actually having a business, if you don't have one, I would also highly recommend that you create a business. Filing for an LLC is a relatively quick and painless process, and it's going to offer you a lot of benefits from the tax perspective. So if your business is primarily in the crypto or NFT space, you're still allowed all of the same tax deductions as you would any other normal business that you can think of, right? So you're still going to take your phone bill. If you've got a home office, you're still going to take percentages of your utility bills, internet, vehicle. So all the standard business deductions are still available to you as a business owner, even if your business is primarily dealing in the crypto or NFT metaverse space. And then additionally, there would just be those nuanced expenses, right? Like for crypto miners, right? Electricity and other, maybe software expenses would come into play, gas fees, etc. So a good rule of thumb to just keep in mind is, as long as it's an expense that is ordinary and necessary to facilitate your business, then you can justify it as a business tax deductible expense. And if you have a question about a specific item, feel free to reach out to me anytime. Like my DMs on Twitter or here on Discord are always open for one-off questions like that. So if you've got something like, oh, hey, I don't know if I can write this off or include this as a business expense, just shoot me a message if it's something specific, or if anybody has one here that they want to run by me, more than happy to answer. But in general, as long as it's an ordinary and necessary business expense and you can justify that, you're in good shape.
Fantastic. So again, if you and Kate, when someone does a one-on-one meeting with you, is that something you would help during a session where it's like, oh, how do I go about creating an LLC or a small business to help with these tax situations? That's something you can kind of offer direction towards? Sure.
Yeah, one of the most common consults that I've been getting actually is just guidance on the most beneficial business structure. So we've got, sole proprietors, LLCs, partnerships, S corps, corporations, and then we've got some folks who have foreign business activity too, and DAOs. DAOs has been a huge one. So yeah, I'm definitely open to those type of conversations. Would love to talk you through selecting the right business structure, but then further, we can go through and categorize all of your business related expenses to make sure you're capturing those in the right buckets for your tax return, maximizing all your potential deduction opportunities. And then, yeah, any general business questions, for either from an investment perspective, if your business is investing in crypto and NFTs, how to best leverage the NFT space for your business, purchasing NFTs and using the additional utility for your business, for example, for marketing purposes, etc. So there's a lot of options out there, and I don't want people to miss out because there's some really good opportunities that this space is offering.
Perfect. Okay. All right. And then Henny asks, do you know methods to pay least amount of taxes in Canada? So I know you're based in the United States, but thought you might know directly, or you can maybe recommend someone that can maybe help in Canada.
Yeah, actually, funny this should come up because I just got connected today with a really great tax accountant in Canada, and she's also the creator of an NFT project called Booty Babes, I think it is. And it's hilarious. And we were in Spaces together earlier today, and she said, actually, I'm a tax accountant by day up here in Canada, but I'm also a creator and I've got this project. And so it was really funny. I didn't expect that. So her and I are going to bounce some work off each other this year, because while I can consult for folks who are non-US residents, I can talk you through some tax implications for your crypto or NFT activity. I can't legally file your tax return for you as a CPA license in the US. And so I've been looking for a solid partner in Canada that I can sort of refer people to and, kind of help share the workload a bit. But yeah, she's great. I'm really happy to connect with her. If anybody wants to get in touch with her, I can throw her Twitter handle in one of the chats. But in general, so back to the question being, best way to reduce taxes. The biggest sort of general tip that I can give you, two things, I suppose. One being, again, start a business. Start a business. If you are skilled at anything, or if you're doing anything that you think you could make a little bit of side money doing, it's so worth it to start a business, because then everything else in your normal day-to-day life becomes a tax deduction for you. I mean, it's the best kept secret in the world. If you want some guidance about what would qualify as a business versus a hobby in the eyes of the IRS, we can chat about that. But in general, it's pretty straightforward. You just need to be bringing in some level of income through the business. You can only recognize initial year losses if you're a corporation or an LLC, but if you're an LLC, it's a loss carry forward. So you do need to have some stipulations to be able to recognize the loss in future years. But in general, if you're pulling in a little bit of income, then it opens the door for you in terms of tax write-offs, meals, vacations, vehicle expenses. I mean, everything in your life that you're doing normally all of a sudden becomes a tax deduction. Huge way to reduce taxes. The other best kept secret that is less commonly talked about, and we actually talked about this in our consult the other day, is tax planning. Because most people wait until January or February to start thinking about their taxes, and unfortunately, in January and February, the books are closed. What's done is done. There's not much we can do to recover your tax position in January or February. But if you are making your initial tax calculations now, between now and the first week of December, if everyone here just exports all their transaction data, makes an account with CoinTracker, ZenLedger, Coinly, one of these services, uploads their transaction data, and gets a sense for what their tax liability is going to be, either from a capital gains perspective, or if you have a business transacting in crypto, you want to get a sense for what your tax liability is going to be, because then you still have a couple weeks before the end of the year, and you can do some really significant tax planning. Do some tax loss harvesting, meaning sell off some lower valued tokens or NFTs, make some charitable donations, or do some tax planning for your business and make some purchases. But if you don't know and you wait until January or February, then there's nothing you can do, and it could end up saving you thousands of dollars, and in most common positions, or tens of thousands if you have a more significant business or investments. And so those would be the two, I think, best takeaways to overall reduce taxes. And again, always open for more detailed questions about your personal situation. If you wanted to get into some tax planning, that's another great use of those consult hours. We can go through your whole tax position, identify some good ways for you to reduce taxes this year, and think about next year. Yeah, hope that helps with that question.
Perfect. No, thank you so much, Kate. And everyone is muted right now for the most part, so I'm sure they're all very thankful. But going on to the next year after the Canada question, adding to this, he says, let's see, I'm doing the same thing, but only in MetaMask, and I don't send them to centralized. Oh, yeah, we answered that question already regarding if you do any swaps, regardless if you cash out or not, to US dollars between token to token, that is a taxable event.
Correct.
Yep. Then we have Peach Trader. Peach Trader asked, that was Mr. Sean Bean. And then Peach Trader says, if we sell tokens in an IRA or in a retirement account, that's not taxable unless we pull money out, correct?
Correct. So here's another best kept secret for tax planning is retirement accounts. And so within the last year or so, the option to have retirement accounts that have crypto as an asset class that you can invest in became a lot more prevalent. And so if you have an individual retirement account like an IRA, and your IRA allows you to purchase crypto assets within the retirement account, you can exchange, buy, sell different tokens, and under normal circumstances where you'd be recognizing a capital gain or loss in those circumstances and have a taxable event, if it's within the umbrella of your retirement account, all of that capital gain loss activity is not taxable to you because you've already effectively paid tax on that money that's going into your Roth, for example, or you're going to pay tax when you take the money out of your retirement account later. So while your investments are sitting within the retirement vehicle, any capital gain loss activity is not taxable. And so that's a really great opportunity if you want to experiment with a bit more trading, and it's going to really hurt you on the tax side sort of now without the use of a retirement vehicle, and you plan on being in this space long term, explore opening an IRA in the crypto space. It could be a really great option for some people. I don't personally have one yet, but that is something that's on my radar, and I think I will. As my firm grows, if I offer retirement benefits and stuff for my employees, it will most certainly be, in the capacity of crypto related IRAs. So it's a really, really exciting space to keep an eye on.
That is awesome. All right. Well, hopefully that helps Peach Trader. And then going on to IRZ John 721. We're about 30 minutes in. And remember, guys, 9:00 is our end time. So hopefully we'll have a few minutes at the end for people just to unmute and ask questions for at least 10 minutes or so, but let's keep going.
Sure.
So IRZ John 721 says, do we have to have an LLC or business in order to claim gas, which I think the answer is yes, and PC component expenses? And also, is there a limit to the maximum amount we can claim? And then he says, additionally, so a two-part question. Additionally, what is the best way to track gas fees and conversions if we have not recorded them in 2021? Which I think you answered earlier.
First part is, do you need to have a business to make gas fees tax deductible? Answer is yes, but also want to make this important point that you don't have to have a registered business entity to be considered a business in the eyes of the IRS. So most people, when they start a business, they're what's considered a sole proprietor, and so you don't have to register for an LLC to be operating as a business and recognizing gas fees. And so just want to make that point. But in general, yes, you do have to be a business. Most people who are miners actually qualify as a business in the eyes of the IRS. So if you're mining crypto, the regularity and the profit generation of that does meet the basic qualifications to be a business. So if you're a miner, oftentimes you will qualify without setting up a formal business entity. So if that's you, we can definitely have a chat about that. I think part two of that question was Or no, maybe part 3 was best way to, if you haven't been tracking this year. Sorry, what was part 2?
Yeah, part 2 to that question was additionally, what is the best way to track all gas fees and conversions, which again would be only those tracker type third-party apps, right?
Right. Yeah, so
Okay.
that's definitely the best way to go about it. If you haven't done anything, yet this year with it, don't sweat it. If you export all your data since inception, the third-party services can catch up and do a lot of that work for you.
Exactly. Perfect. Peach Trader asks, if we send crypto to someone else's wallet as a gift, is it taxable?
Great question. So the current gift tax exemption threshold is 15,000 US dollars. And so you're allowed to gift someone up to $15,000 worth of assets in a given tax year. So if you gift someone a car valued at $5,000 and some crypto valued at $10,000, you've now reached that recipient has reached their maximum threshold for gifts, and then any gift beyond that $15,000 threshold that they receive will be taxable to them at their ordinary income tax rate.
So the recipient, so how about the not the receiver, but the sender of the gift, they do have to pay taxes on that?
Nope. So you're not paying any tax on that. If you're just giving someone a gift, same way if we think about it in real life, right? If you give someone a car or any other asset, that's not a taxable event to you as the giver, doing a good deed there.
Gotcha. Okay. Very, very good. So that hopefully answers your question, Peach Trader. And then Colette asks, adding to this, do you know how taxes work in New Zealand? And this is from just following up from the Canada question.
I do, actually. Funny enough, my wife's a New Zealand citizen, and so I lived in New Zealand for about 2 years. Came back to New York about a month ago, and we'll be here in the States for a year or two. But yeah, actually, when I was in New Zealand, I did work in tax a little bit over there. Got reasonably familiar with the New Zealand tax code. So if there's any specific questions New Zealand related, we'd be more than happy to take those or chat offline too. Either way.
I think that's hilarious how it's just New Zealand out of all places, right? So,
Of all places, honestly, because I really don't know. I'm not intimately familiar, with many other jurisdictions, so that was really funny. But yeah, whoever asked that question, feel free to just chat with me offline. You don't need to book a consult or anything. We can just message back and forth, unless it's a lot more in depth and we need an hour or something. But happy to take a few questions on that. That'd be great.
Perfect. So Colette, you heard it. She knows all about New Zealand, or hopefully she can give you some direction. So awesome. And it looks like Bang asks, we only get taxes if we pull money into the US dollar, right? I think that was already answered. And the answer is no, you actually get taxed on each individual swap. And then if you keep it in crypto or a stable token, you'll be okay, right? Lol, that's what I've heard.
Yeah, unfortunately, the IRS has classified cryptocurrency as property rather than currency. And so it's a bit frustrating, right? Like if I were to go across the border to Canada and swap my US dollars for Canadian dollars and make a purchase while I'm in Canada, say I buy a painting or something, that's not a taxable event to me just because I'm using Canadian dollars to make that purchase. Because the IRS classifies Canadian dollars as currency equal to US dollars. But cryptocurrency, because it's classified as property, the minute I swap my US dollars to a cryptocurrency and then use that cryptocurrency to make any other purchase or exchange for another type of cryptocurrency, it is viewed as a simultaneous sale of property and acquisition of new property, which is why it's taxed, unfortunately.
Fantastic. And I just wanted to get this also out. So anybody that's in here, whether you're a small business owner or not, I just want to make sure this is a fact. Anyone who does a consult with a CPA, so if you're to do a consult with Kate, that regardless of your position, business or not, that also classifies as an expense. Is that correct?
So professional service fees are tax deductible. Yep. And so if you're meeting with a CPA like me, you can deduct that for sure. If you are in Canada, though, or another country, I will just put an asterisk because I need to just verify that. It might depend country to country. So Yeah, if you're in another jurisdiction, I'll follow up with you on that one.
Perfect. So if you're, wondering, oh, how much is it to book a call or become a client? Just understand that ends up literally paying for itself from your, taxable, from your taxes, basically. It just brings
Correct.
down the amount of money you have to pay back. So hopefully that gives someone a little bit of understanding there. And then we have Patty 18K. If my wallet was hacked and I lost all my gains and my initial investment, how do you report stolen crypto on my taxes? That's a good question.
Yeah, that's a great question.
So,
And I was pulled into one of these scenarios not that long ago on Twitter. There's a guy who he quote unquote accidentally gave his seed phrase to a hacker. He was like on the phone trying to get a sale to go through or something. I don't know how he ended up doing this exactly, but the hackers stole like a couple Bored Apes out of his wallet. It was like a disaster. He had like $200,000 in value stolen. And yeah, so it was like myself and an intellectual property attorney. We were trying to work with him to try to figure out, any type of loss recovery that he'd be, eligible for. We even thought about getting the FBI involved, but there's really, there's really nothing that can be done. And it like pains me to even say that because if you think about it, though, it's like the decentralization and the sort of DeFi nature of this space, is sort of like anti-regulation, like FBI, right? So like going crying to the FBI because my DeFi, my decentralized assets, got taken from me. I guess sort of rightfully so that they're kind of, putting their hands up in the air saying, well, can't really help you. But from a tax perspective, though, if you are operating as a business, you are able to report loss from theft. If you're an individual investor, though, you're sort of left holding the bag, which is really unfortunate. So just protect your seed phrases. Do everything you can to avoid that situation. But if you are in the context of a business, we can value your portfolio that was lost due to theft, and we can report that as a loss on your return.
Perfect. Fantastic. And then in addition, we have Galadine asks, if I transfer crypto from one wallet to another that belongs to me, is that a taxable event? And what if I gift it to someone else in their wallet? Does either of us get taxed, or do either of us get taxed?
Yeah, so just transferring to yourself in another wallet, not a taxable event. You'll likely be incurring gas fees, though. So that's just something that you'll make a note of. But nope, not a taxable event if you own the other wallet. And I think that's important to note, too, because a lot of people have been saying or asking me in the NFT space, if I have an NFT that's worthless that I want to get rid of, can I just transfer it to like a quote anonymous wallet that I control and deem that as a disposal of my worthless asset, token or NFT? And the answer is unfortunately no. I mean, I'm of the position that I want to keep all my records very clean, and so that would not qualify as a legitimate sale or disposal. And so if you do own the other wallet and control it, and you're just transferring between wallets that you control, it's not a taxable event.
Perfect. Thanks, Kate.
Sure.
And then J Raw Bread says, does Coinbase report on your crypto gains?
Yes, they do, for accounts with activity over $5,000 cumulative, unfortunately.
Perfect. Anything over 5K gets reported.
They're going to know about it.
What was that?
They're going to know about it.
Yep. So be careful there for sure. And Fotiz says, in the event of a rug pull where my investment, say, went from $1,000 to $15, but it costs 0.1 Ethereum or $400 in gas to sell for a loss, do I have to sell, or can it be considered an unrealized loss?
So unrealized losses are not going to offset your capital gains. It's only realized losses that can reduce your capital gains tax. So you do have to make the sale, unfortunately. That being said, there are opportunities where you can bundle. So if you've got a couple worthless NFTs that you're trying to offload, you can bundle and save on gas potentially. I actually have a client of mine who's working on launching a business within the next probably week or two that has a really cool charitable arm, and they're essentially gonna offer to purchase bundles of worthless NFTs and repurpose them for educational or charitable purposes with kids. And so there will be at least one service out there if you've got a bunch, because if you've got like one rug pull that you're trying to offload, you can probably find a friend to say, hey, can you buy this off me? I'll get you back on the gas or something. Just if it's substantial enough loss that you're trying to harvest, say it's gone down in value like a couple $1,000s, right? And it is still worth it for you to recognize the loss. You can always find a friend probably to help you out. But if you're dealing with like some serious tax loss harvesting, you've got hundreds of these rug pulls that you're trying to offload. Then yeah, you are going to need to find a way to realize the loss, because unrealized losses are not going to offset your capital gains.
Perfect. That makes total sense. And then we have Lou Hustles. Sounds like he might need a new accountant, because he says, I own a large Amazon FBA business and have a current accountant. My accountant is local and has never dealt with crypto space. So the simple statement is gas fees is foreign to him. Same with accountants that have never dealt with the Amazon FBA sellers. Things are very foreign to them. So have you ever had a client in the Amazon space?
I haven't actually, but I would certainly be open to it. I think a lot of the, just due to the nature of this space, right? A lot of times clients come to me with new nuance, with DAOs, for example, airdrops. There's a ton of new and ever changing nuance within this space, and that's what keeps things really exciting for me. So I'm, always open to diving in, doing research, learning with my clients, and maximizing your tax position. So yeah, have not worked directly with Amazon FBA, but would certainly be open to it. And if crypto has become a significant, piece of your business, and you would like to prioritize that in your accountant, definitely have that piece for you. And so, yeah, would certainly be open to the conversation, and would love to chat.
Perfect. So Lou Hustles, you know who to talk to, man. And we have MHPL. Can you invest gains in real estate to avoid taxes?
So Likekind exchanges, I think, is where we're getting with this question. And so a Likekind exchange in the real world involves tangible property only. And so Likekind exchanges at the moment do not extend to the crypto and NFT space. Similarly, if you were going to try to, say, realize a capital gain from a crypto or NFT sale, but then as your community member asked, immediately reinvest that in real estate, would that reduce the amount of tax that you owe? And the answer is unfortunately no, because it does not fall within the Likekind exchange regulation. And so in real estate, typically, if you make a sale of real property, recognize a capital gain, but then you immediately reinvest that gain into a purchase of another property, that qualifies as a Likekind exchange, and your taxes are reduced. So I'm really curious, I'm optimistic that the IRS will eventually come around to recognizing NFTs in particular as being eligible for the Likekind exchange rules, because they are certainly an asset. They're certainly, property that has utility. And it's going to be quite common that, people will sell one, immediately reinvest in another. And so I'm optimistic that will eventually be a part of the formal guidance, but at the moment it's not. And unfortunately, we're not eligible, for Likekind exchanges. Hate to end on a depressing note there. Hopefully there's one more question.
Yeah, no, exactly. I mean, it's good. Well, the next question actually is from Angel One.
Okay.
And that is, how do we hire Kate? I want her to do my taxes.
Oh, that's so kind. So we definitely are still onboarding clients for the 2021 tax year. I've got a little more capacity on my team now, so happy to say that I can still take on new clients for 2021. And you can just go to the website, taxeswithkate.com, and book a meet and greet if you just like to chat and get to know us. We can learn a bit about your tax return or your individual circumstances with crypto or NFTs, or you can book us on a consultation basis if you just need some help talking through some decision making or individual transactions that you might have questions about. But I would imagine that probably by Christmas we'll have our client list closed out for the 2021 year. So I'm just trying to do my best to get out there and communicate as much of the basics for folks so that come February, people who haven't found an accountant yet aren't scrambling, and all the accountants that are versed in crypto and NFTs are fully booked. So I would emphasize that even if it's not me, that you do your best to lock in an accountant before the end of 2021, just to ensure that you do have someone who can be on your side and knowledgeable in crypto and maximize your tax position for you.
Right. And honestly, for everybody that's in the Patreon group, like I know for a fact, everybody has made some significant amount of gains. So please, I don't want anyone to get in trouble for, just not even like unknowingly not filing your taxes correctly. So might as well take some of those gains, invest it into a really good accountant. I would highly recommend Kate, obviously, because, she's now my official accountant. And yeah, I think it really makes the most sense. I do have her website. When you go to the general chat, it's pinned there. So go on their website, go in there, let her know that you came from the Discord, and hopefully you could, get all the information you need directly from her one-on-one, which I think is going to be pretty awesome.
Yeah, I think we can definitely do a discount for the Your Pop crew too.
There you go. So just an added little bonus there, which would be really awesome. And yeah, it's 8:50. I don't know where the time just went.
I know, it's amazing. Like talking about taxes, man, the time flies.
Right. You'd think it'd be like a minute an hour, but I don't know. I guess this is fun for some of us. Mike Bike. This is actually a good question because I think this is kind of what I was trying to ask, but I didn't ask it. So $15K gift deduction is max per person. For example, if I were to gift $15,000 to 3 people, can I deduct $45,000 from my taxes? Unfortunately, right. So I think the answer is no. But
yeah, so he's correct in that the exemption is per recipient. So you can gift up to $15,000 to as many people as you want if you are kind and so generous to do so. Please do. That's but yeah. It's not going to result in a $45K tax deduction for you, unfortunately. But it is a nice gesture, and your recipients will be ever grateful.
Oh, man. That'd be the best way to write off taxes. Just give away money.
Just like give away, just like find all your closest friends, Merry Christmas, and it'd be great.
And then they just casually give you some back.
But if you discreetly give it back. But if you give to charity, though, that is a deduction. So if you are donating to a registered 501c3 charity, then that is deductible. So if you gave $45,000 worth to charity, then you can deduct that.
Gotcha. And I think that answers the next question, who says, adding to this, is there a time frame for this? So can I give 15,000, say, every month, and neither of us get taxed? But answer is no to that. Only the gift recipient doesn't get taxed, but you will, because those are your gains that you made, maybe?
Correct. And the time frame is for the tax year. So per calendar year for 15,000. Yep. You can, the only tax deductions you can still activate after year end are retirement plan contributions. So if you own a business, you can still make contributions to your retirement plan after year end. I think there's like a 30 or 60-day window, depending what state you're in, depending what jurisdiction you're in. So that is the only option post year end that you can leverage to reduce taxes if your capital gains are on fire and you really need to do some tax loss harvesting, make some contributions to charitable vehicles, etc. So yeah, but I guess suffice to say, do everything before the end of the year. Then you're not running around in a panic, and everything will be clean, and you won't be stressed. Hope that answers that one.
Perfect. So there you go, Al Crypto. Honestly, I'm just going to keep it because there's some really good questions at the end here. So I'm going to keep reading them off, and we'll just call it there right around 9. in about 8 more minutes here, or 10 for you. We're keeping you up late.
That's okay.
Dark Dan 55. Do fees reduce my tax? So that's actually a question I had too. So for example, when you're cashing out on Coinbase, they charge you a percentage fee to take the money from Coinbase. It's just like a Coinbase fee, not a gas fee, but a Coinbase fee or other fees. Can those reduce tax?
Yeah, so if you're an individual not operating as a business, unfortunately, no, those are just fees that you have to eat. But if you're a business, those are transaction fees that you can tax deduct. So that's great. If you're another plus reason to operate as a business, everybody.
Guys, by the end of this call, I want every single person to have an LLC or some type of business. Everybody,
Yeah,
go register your business.
You don't even need the formal entity. You can just start operating as a business, as a sole proprietor. But do something, because it really the tax advantages are endless. It's great.
Yeah.
Sorry, but with the LLC stuff, so only matters when I'm cashing out, or also depends when I'm going in. So if I cash out as a LLC, does it matter if I went in as a person, individual, or it has to be you had to go in with your LLC card, like company card? The money has to come from the company, or you just cash it out as you were the company, but you started as an individual.
Right. So if you start a business as a sole proprietor and then eventually you evolve and register as an LLC, the IRS still views that tax year as the same business. So you can still leverage that activity from earlier in the year before you actually had the LLC open. If you jump from having no business to then just having an LLC, then your LLC activity starts from inception, the date of the LLC's filing. So your personal activity then wouldn't be eligible for the LLC benefits. It would only be post LLC filing.
Perfect. Understood. Thank you so much.
Sure.
Perfect. Thanks, Dark. And Angel, if I have dual citizenship, do I have to file taxes in the States?
Sure do. So you don't even need to have dual citizenship if you qualify as a U.S. tax person. So you could be a citizen, you could have a green card, you could have a work visa, you could just be in the U.S. for 182 days or more in a given tax year. Then you qualify as a U.S. tax person and you have to file taxes in the U.S. and the U.S. can tax you on your worldwide income as well.
Dang, Uncle Sam.
Uncle Sam is coming.
Yeah, and I think this year is going to be like the worst of them all, because this bull run was like none other. So for everything, it's been crazy. All right, Kokaza, you mentioned using NFTs as marketing being an opportunity to reduce taxes. Does this mean that you can write off the purchase price of an NFT as a marketing expense? And if so, how do you calculate gains, or do you even have to when you sell this NFT in the future?
Yeah, so couple of options related to NFTs. If you, again, within the context of a business, I think this will become more prevalent, but one of the utilities that became immediately obvious to me was a lot of these NFT projects offer commercial licensing utility. They allow you, or they give you full IP rights for the image, and so you can then take that and use that for branding or marketing purposes for your business. And so you have a couple of options. You could expense the full purchase price of the NFT as a marketing expense, or if you have another use for it, as long as it's an ordinary necessary business expense, you could fully expense it and deduct the purchase price amount. But what I would actually recommend is that you recognize the NFT as an asset on your company's balance sheet, and then amortize the value over time and basically spread the recognition of the expense over time, because the NFT in reality is more than just a tool for marketing. It is an asset that could potentially increase in value over time. And so your business is effectively buying an asset, similar to if you think about when your business buys a vehicle, right? And you could wrap that vehicle head to toe in your business logo and arguably use that vehicle as a marketing tool. But you wouldn't only consider a car for marketing. It's got other utility, and so you include that as an asset on your business's financial statements. And so I would make the same argument for an NFT. And because it's intangible property, it'll be subject to 15-year straight line amortization. And then later, when your business if you decide to go sell that NFT, think of it similarly to if you're an individual investor and you purchase an NFT, you're going to have a cost basis, and then you'll recognize a gain on the difference between your cost basis and then the sale price. So pretty straightforward there.
Perfect. Now, Kokaza also continues and says, what retirement accounts and companies actually let you buy crypto as an asset? And then he says, if you, I think this was when we were talking about the theft thing. So if you make $1 million in gains and it's stolen, then you really have to pay taxes on 1 million?
So first part of the question is what retirement vehicles allow crypto? Off the top of my head, I don't remember the names, but I do have a document going listing out the IRA providers because I was looking into it myself the other day. So I'd be happy to share that with you to drop in the chat if you want, if somebody wants to explore that. So then on the theft question, yeah, if you recognize, so if you realize $1 million worth of gains and then you're subject to theft, yeah, it's just unfortunately really like the IRS would sort of view it as if you had $1 million in cash like sitting under your mattress, it's not really, you could make a case maybe, but just in my limited experience with this, if you're not under the context of a business, the tax loss write-off is not available to you as an individual. So it's, again, something that could probably be subject to change as we get more official guidance from the IRS on this one. And I've got an IP attorney that I'm in touch with regularly, and so she's sort of keeping up on the latest and greatest. I'm part of this small peer group, and we all sort of divide and conquer with keeping up with the legislation so that we all don't have to bang our heads against the wall and keep track of the latest regulations. But yeah, I mean, that's an area that I'll be watching closely because I think it will be unfortunately all too common this year. Perfect.
Okay. And I think this is a really good question. We only have about like 3 more, I think, but let's see. Sure. He says, the same guy, Kokaza, what about if you transfer to the universal burn wallet? Are you familiar with burn wallets, Kate?
The universal burn wallet, I'm not. If anybody knows and can give me a 30-second rundown.
To be honest, I don't know universal, but I just know, generally speaking, like dead wallets or burn wallets that just can't come back into circulation. And honestly, on my channel, for my merch store, for example, I'm just going to use myself as an example. 25% of all revenue I use to put into the burn wallet for Shiba Inu tokens. So I buy SHIB with the realized gains from my total revenue that comes in from the merch store. I'm very transparent about it. And I usually do it live or on a video where I burn 25% of tokens to the burn address, which, can vary about, month to month. So I wonder.
And so then the burn wallet, what do you do with the tokens at that point?
They're just out of circulation forever. Like they can no longer come back into circulation. It's basically to reduce the circulating supply. Say that again, Kokaza?
It's like a lost wallet. And I was asking this because you were saying about the NFT transfer thing. And if you just wanted to get rid of the NFT, but could you send it to this universal dead wallet? Like all the coins that create a supply and then burn half their supply, just send it to a known dead wallet. So that's something that you can prove that, hey, I don't own that wallet.
Right. I'd be of the position that if you can justify that as a quote unquote disposal, effectively in the real world, sending your asset to the dumpster, right? If that is, it will be verifiable on the blockchain. And so if you can effectively dispose of tokens or NFTs that way, and it's truly not accessible to you anymore, and it's taken out of circulation, I'd have to review the individual circumstance just to make sure, but at first glance, I would definitely think that'd be eligible to be recognized as a disposal, and another alternative to be able to recognize some losses.
Okay, well, that's really cool. I did not know that. So that's actually really that's cool news. So hey, if we want to contribute to the Shiba Inu burn, maybe I need to. Oh wow. Okay, I need to do something about that for a video idea by the end of the year. Thank you for asking that, Kokaza. Fantastic question. And
Yeah,
everyone
that's
else.
it's a really interesting topic.
Yeah. Yeah. Everyone
I'm
is
going to dive into that a little bit more too. Yeah.
Absolutely, absolutely. So for the last few here, Dark Dan, does the 100% do 100% of my losses reduce my capital gains declaration, or just a percentage of my losses? I think that's when it comes to, is it $3,000 also for crypto, like for capital losses, or?
Yep. So capital losses can offset 100% of your capital gains, and then if you still have excess losses, you can take an additional $3,000 and apply that to ordinary income. And if you have additional losses beyond that, then you have to carry forward to the next year.
Perfect. And Omar just saying nice words. He says, "What does Kate need done in Canada? I'm in Toronto and I'm willing to partner up and do anything for her. Serious business.
Do it. Let's do it."
She said, or Omar says, "She's my new official accountant. It's official. Amazing call." Cool.
I'm so happy to hear that.
Yeah, Omar's been a supporter for a while, so that's cool to hear. Awesome. I'm glad that you guys are all benefiting from this, and I hope to have Kate on maybe a few more times throughout this year, next year, just with any kind of questions you guys might have. But thanks, Omar, for that. And Bloop139, at what price point do we need to worry about being taxed? And you said anything over $5,000, and is that correct?
Well, so anything over $5,000 is going to be reported to the IRS, but you're still liable for a tax on any amount, even $1.
Oh, okay. Even $1. Perfect.
It's just that the IRS will for sure have your data if your transactions accumulate to over $5,000.
Fantastic. Last two questions of the night. Sorry, we're a little over. Jado says, "Hi, Kate. Assuming I open an LLC today, will I be able to claim earlier transactions for 2021 as expenses, losses, and gains?"
You can, if you can make the argument that you were operating as a business, as a sole proprietor prior to opening the LLC. And that's fairly easy to justify, to be honest with you. Like, I think that's, you'd want to just have a conversation with your accountant about that to be sure. But that's generally a pretty easy justification to make. The only stipulation is if you're truly going from not having a business at all to then filing the LLC, if it's truly personal transaction activity prior to the LLC opening, then you might have a hard time. But like if you can make the argument that, I sort of like was starting this business, I was, feeling my way around, seeing if it was going to be viable before I filed for the entity, right? Then absolutely you can claim that you started the business prior to the LLC filing, and all of your ordinary and necessary business expenses, phone, internet, yacht, et cetera, can definitely be included even if they're prior to the LLC actually being filed.
Perfect. And then MHPL, since I have a trucking business, do I need to open a new LLC?
Yes. So you will need to, if your business, if you do already have an existing business and it has sort of defined business operations and parameters, and you throw in something completely out of left field as a completely new type of business operations, the IRS won't like that. So I would recommend opening another LLC if your business operations are totally unrelated to one another. But for example, like if you are a musician, an artist, a creator, and you transition into leveraging the NFT technology and crypto space, that's not a different enough type of business operation to warrant a new entity. So it would probably be a 5-minute conversation with me or with your accountant to make sure yes or no whether you need a new entity or not for that one.
Perfect. All right. And that was the last question after the cutoff. There were some that were asked, but guys, if you do have any more questions at all, please reach out to Kate. I have her website in the general chat. And thank you everybody for joining us tonight. It was honestly, I just feel like I need to sit down and reflect. I'm so glad. Oh, by the way, Kate, is this okay with you? We did record the session.
Yeah, definitely. Really glad we did too, because I know like the time difference might not work for everyone, and so more than happy to have you share it around. And like I said, I genuinely mean it. If you have other questions that you think of maybe after the call, feel free to send me a message on Twitter or here on Discord. Always happy to answer questions. Yeah, or if you feel like you want to be a tax return client or maybe have some more serious consulting, you can check my availability on the website, and that's taxeswithkate.com.
Fantastic. There you guys got it. And I put Kate's Twitter there as well. So don't overwhelm her DMs, but feel free to maybe shoot a message. But if you need something more extensive, more one-on-one, I would highly recommend it. I will only recommend the best for you guys. And honestly, she really is the best. So thank you so much, Kate, for giving us your time today. And we're looking forward to having you on the YouTube channel too. And
very excited about that.
Yeah. And hopefully more of these Discord calls in the future as well.
Most definitely. If it would benefit the community, I'm more than happy to come back as often as you need. So thanks again for having me.
Well, of course. You have a good rest of your night, and everybody else, thank you all for coming. And Sunday, our DD call is still scheduled. I'll be on Discord tomorrow and probably the next few days. So we'll all chat soon. But if you guys have questions, please just let's talk in general chat, and I'll stick around for a bit after Kate leaves. We can just kind of talk. Let me know pros and cons, how this went, because it's our first time doing something like this. So thank you so much, Kate.
Awesome. Thanks, everyone.
Yep. Have a good night.
Thanks, Kate. Huge thank you.
All right. Well, guys, Rocky, you can end the recording and do what you got to do. But folks, I appreciate everybody for tuning in. Honestly, like she's just such a wealth of knowledge. And I was on the hunt for a CPA for like the last 4 or 5 weeks, ever since I stopped working at my day job, right? My pharmacist position. I've been digging around, looking. I was like, I need a CPA. And nobody knew about crypto taxes. Literally no one. So I was like, all these CPA firms that I was going to, around my vicinity, they're like, oh no, we can't help you. We can't do this. Then I run across Kate on Twitter and she's like, oh yeah. I can help you figure out all kinds of tax deductions. And because that's the reality, right? The reason that we're all in need of a CPA is to save money. So if you're worried about the amount of money you have made in crypto and you don't want Uncle Sam to take your entire cake or pie, talk to Kate. I honestly wouldn't recommend her unless she really was the best. And so far, I've been impressed, and we've only been talking for like literally less than a week. She's like, oh yeah, I'll come on your Discord. I'll ask, we'll do a Q&A. I'll give a discount to everyone. And I was like, all right, I like this girl a lot. So yeah, if everyone wants to unmute, let me know what you guys thought of tonight. Kind of just want some feedback in the future. Do we want to do it the same way, differently? The floor is, the ball's in your guys' court. So anybody, feedback?